Welcome back to the cryptoworld channel, everyone. My name is Josh, and right now, this new bearish signal just confirmed as prices are running into important support. And while this is happening, the second largest stablecoin in the world, USDC, officially crashed from its $1 peg. So later in the video, I'll be talking about why this has happened and what the future could look like for USDC moving forward. So definitely stick around to the end of the video to find out more. First of all, starting off on the 3-day Bitcoin chart, taking a look at the super trend indicator, which has officially flipped back into the red, and this has now been confirmed with one 3-day candle close. So simply based on this indicator alone on the 3-day Bitcoin chart, it is now telling us that we are potentially about to begin a larger bearish trend here on the 3-day time frame. Now, it's worth mentioning that this indicator does not 100% guarantee anything because it's not 100% accurate, but throughout history it has been very accurate, more accurate than it has been inaccurate, which means the chances of more bearish price action to come are higher than bullish price action, at least as of right now, based on this indicator. And also, now that this bearish signal has been confirmed in the 3-day super trend indicator, this previous multi-month long bullish trend that we've seen since late November to early March is now technically over. But anyway, if you zoom into the daily Bitcoin chart, as we can see here, obviously this resistance has not changed, and same with this bearish divergence. As I've been saying every day over the last 2.5 weeks, we still have a strong bearish divergence, putting a lot of bearish pressure on the price. But as I mentioned in my last video on the channel, the daily Bitcoin RSI is now entering into oversold territories as the price is running into this major area of support. And so this basically means we could end up seeing a bit of stability in the shorter term for the price of Bitcoin. So basically we could end up pausing this bearish price action as we've seen over the last 1 to 2 weeks. We could end up seeing a bit of a pause in that price action with either a sideways consolidation or a slight bounce in the shorter term in the price of Bitcoin, because once again, the price is running into this area of support, which by the way is coming into play in between around 19,000 all the way up towards around 20,000. In that massive price range right there is quite a lot of support. And as for other levels of support, taking a look at the Fibonacci retracement tool from swing low to swing high on the linear scale, we have the golden pocket coming into play in between 18.8k to around 19.2k, and we also have some support at around 20,000, give or take. But once again, the golden pocket is the most important Fibonacci level at approximately 19,000, give or take. But if that level gets broken, then we have the 78.6% Fibonacci level at around 17,500. And these Fibonacci levels of support line up very well with the volume profile indicator on the daily time frame. Once again, we have this area of support we're running into right now in between around 19,000 to 20,000. But if we start seeing a break well below 19,000, more specifically below 18.8k, then in that case we have a major gap in the volume profile indicator, which means we could see a quick drop to the downside down towards this next area of support in the volume profile indicator, which starts at around 17,500 or the low $17,000 area. So that is why 19,000 is the important support to pay attention to immediately right now on the daily Bitcoin chart. But anyway, now getting into the Ethereum part of this video, this right here is the daily ETH to US dollar chart, and right now the price is still trading below this important area of support, which is now acting as resistance, sitting at around 1.5k. And of course, this bearish divergence is still playing out, as I've been saying pretty much every day over the last 2.5 weeks. But the daily Ethereum RSI is nearing oversold territories. It's not there just yet, so we could go a little lower before it starts getting into oversold territories. But considering it is getting very close to oversold territories, once again, we're due to see perhaps a little bit of stability in the shorter term, as in either a short-term bounce or a bit of sideways consolidation, perhaps within the next few days. But that doesn't necessarily change the fact that right now, in terms of the trend, we are still pointing in the bearish direction, as I also said in my last video. And as for support levels, looking at the volume profile indicator, we have major support starting at around 1360, going down towards around 1260, with the majority of this support sitting in between around 1260 to around 1.3k. And now if you take a look at the Fibonacci levels of support, we have this area right here, which was the 38.2% Fibonacci level, sitting at around 1450, and right now that could be acting as a bit of short-term resistance. But the support level that has held up over the last one day is the 50% retracement level. That was sitting at around 1360 to 1370, as I also mentioned in my last video. But if that level gets broken, then we have the most important Fibonacci level, the golden pocket, coming into play in between around 1270 to around 1290, which lines up very well with this area of support in the volume profile indicator. But anyway, now getting into the USDC situation, and right now, as you can see here, there's a massive depeg happening as we speak. In fact, at the time of recording this video, the price per USDC is sitting at approximately 90 to 91 cents per USDC, and it should be sitting at $1, considering it is meant to be a stable coin. And so what exactly is happening here? And well, first of all, before talking more about USDC, I first need to mention Silicon Valley Bank, which is a massive bank that has just collapsed. In fact, it is the largest bank collapse since the 2008 global financial crisis. And now I won't be going into deep details about exactly what happened with the bank, but essentially the bank has just lost a lot of money on the bond markets because Silicon Valley Bank put a lot of its customer deposits into the bond market right near the top of the bond market, and right now it's been forced to sell those bonds at a loss because there's essentially a bank run happening where everyone's trying to withdraw their money all at once, forcing the bank to sell more bonds at a loss, and essentially it's bringing the bank crumbling down. And as of right now, Silicon Valley Bank has essentially collapsed. Now keep that in mind while I talk about Circle, which is the company that issues USDC. And as Circle says here on their Twitter, they actually have around 3.3 billion US dollars out of that 40 billion US dollars that's meant to be backing USDC one-to-one reserves. And that 3.3 billion is essentially trapped in Silicon Valley Bank, that bank that just collapsed. And so there's a big question mark on how much of that 3.3 billion Circle could actually get back from Silicon Valley Bank. Now, it's very likely that they won't lose all of that 3.3 billion. It's likely that they will get some amount back, but at least as of right now, we don't really know for sure exactly how much Circle would be able to get back from Silicon Valley Bank, which of course is that collapsed bank once again. And now in the worst case scenario, let's just say if that entire 3.3 billion that's sitting and trapped in Silicon Valley Bank ends up being lost and Circle cannot recover any of that 3.3 billion from Silicon Valley Bank, then in that case, that works out to be close to 8% of the total $40 billion reserve that's meant to be backing USDC, which means in that worst case scenario, let's just say if that 3.3 billion is gone, then each USDC would be backed by around 92 cents, because once again, around 8% of the backing, 8% of the reserves would be lost, would be gone. And now let's just say if Circle was able to recover around 2 billion from Silicon Valley Bank and instead only around 1.3 billion was lost to Silicon Valley Bank, then that 1.3 billion would work out to be close to 3% of that total $40 billion reserve, meaning that each USDC would be backed by around 97 cents with a 3% loss. And now you might be wondering if the worst case scenario, which is that 3.3 billion gone, meaning one USDC equals equals 92 cents. If that's the worst case scenario, then why is 1 USDC trading at about 90 to 91 cents on the market as of recording this video? And well, this is because of two reasons. One of the main reasons is because redemptions right now over the weekend have been shut off. And so basically arbitrageurs cannot currently do their job. Arbitrageurs are the ones that essentially restore the peg because they buy USDC on the market and then they redeem USDC one-to-one for USD. And by doing that, if they're buying USDC at a discount for less than $1 and redeeming it for 1 USD, then of course they're making profit. And by doing that, they're also buying up the USD on the market and restoring the peg. But right now, those redemptions have been paused by Coinbase, as you can see in this tweet, which essentially means the arbitrageurs cannot do their job as of right now, and they cannot really buy up USDC and redeem USDC because those redemptions, once again, have been shut off. And now Coinbase do say in this tweet that redemptions should open back up on Monday, which means on Monday when the banks open back up, we could end up seeing a bit of a recovery in the USDC peg as the arbitrageurs step in and start buying USDC to redeem it. But it might not fully restore the peg all the way to $1 because, like I said, we could still be looking at a potential up to $3.3 billion loss in the reserves that are backing USDC. And once redemptions turn back on, that essentially reduces the supply of USDC because as redemptions go through, the supply of USDC gets burned. So the supply of USDC goes down, which means that potential $3.3 billion hole becomes a larger share of the total supply, a larger share of the reserves. So once again, if redemptions open back up on Monday and a lot of people start buying USDC to redeem it one-to-one for US dollars, then that sends the supply of USDC down and the reserves, the total reserves, down, but the potential loss to Silicon Valley Bank up to possible 3.3 billion, that stays the same. So as the reserves go down, then the hole in USDC reserves potentially gets bigger. So what is currently considered the worst case scenario, which is 92 cents backing each USDC, could actually become worse if redemptions open back up one-to-one redemptions on Monday, because in that case, we could end up seeing the backing for each USDC drop well below 90 cents if they don't plug this hole soon. But anyway, as always, I'll keep you up to date in real time over on my Twitter. I have been doing that throughout this situation so far, so definitely follow me over on my Twitter if you haven't already. The link to my Twitter is in the description down below and also in the pinned comment. But for now, if you want to know how to maximize your profits in crypto, no matter if the prices are going to the downside, to the upside, or just chopping around sideways, then make sure to watch these videos popping up right here on your screen. The video in the top left shows you how to make money if the price is going either up or down, and the video in the bottom left shows you how to make money if the price is chopping around sideways. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.